it's interesting, right? Because it's like it sort of illustrates, and I think it's important to talk about this. It illustrates that like when we lock ourselves into these product constructs, we are locking people in on like both sides of the transaction, right? Because to your point, like the small business borrower who needs more credit because their situation has changed, having to jump into an entirely new product or go get a new loan rather than their product adapting to them is a great example of that not meeting their needs. On the back end, I think the other example you gave is also really interesting and worth probably bringing into the piece, which is like the securitization market and the secondary market for loans is entirely defined by the structure of these products and then investors' ability to sort of price risk within those products. But their ability to price risk within those products isn't perfect because, to your point, people like use credit cards for all kinds of different things. And that's because it's easy to underwrite a general purpose credit card with a limit and then be able to securitize those receivables and do those things on the back end. But like the actual way you would want to price and underwrite risk on the front end and then sell it on the back end might be much more granular. It's just we haven't had the tools to do that.
Exactly. And so tactically, that is something that we are doing at Canopy. So historically, most fintechs have had one sponsor bank, one lender of record, maybe one debt facility. Sometimes they're the same, sometimes they're different. And no matter what is getting underwritten, the takeout portion of the business has to just deal with it. And it's a symbiotic relationship where the takeout portion tells the fintech, this is your box, play within this box. And so that box, let's call it a 3-year loan that's at prime, it is excluding a bunch of the universe of other people, which goes back to the Kickstarter problem of like it working on a small scale, but taking it to the masses. In addition to that, you have like an inability to de-risk things from a borrower and fintech perspective. So what Canopy enables is our partners, and we encourage this, to set up multiple debt facilities, multiple sponsor banks, and then Canopy can allocate individual components of a payment, individual components of a transaction into these different loan tapes on the back end automatically in real time. And so what does that mean? Well, it means that the debt buyers are getting instant access to the repayment data. And so they're seeing it happen instead of waiting to the end of the month. And the fintech and the borrower, like maybe the borrower is not great for this one bank, but they're good for another bank. So they can continue to use the product. Engagement goes up, the expansion of universe in terms of who you're able to approve and for what credit limits and for which spend and which MCCs. All of this becomes more democratized, which, I think is ultimately the goal. And then I think there is something about, this goes kind of back to the middle piece of what you were saying, which is that, okay, Marquette and Galileo came along. It was a self-fulfilling prophecy to create debit cards, and fintech invested very heavily into creating just plain English consumer facing language for finance people. And that was like, I'm going to help you understand the terms of this thing. That's good to an extent, right? To just understand what I'm getting into. But what's even better than that is understanding the actions that I'm taking and what this actually means to my credit and my situation. So you can describe to me up front, hey, this is what may happen to you. And I'll say, okay, cool. But then when it actually happens to you, who is going to help you understand that? So it's the difference of saying up front, hey, Jess, you're going to be approved for this amount of money and it's going to be due at this point every month. You're telling me about this, but it hasn't yet happened. Now you're approved for it. You start actively using this product. Well, when the borrower calls in to the fintech and says, hey, I have a question about this on the account. Basic questions cannot be answered with the old regime. Basic questions like your actual payoff amount right at this moment cannot be answered, because TSYS and Fiserv and FIS calculate shadow interest that isn't available in the CRM systems that service reps use, and they apply it to the account at the end of the cycle. So there's no way of actually understanding total balance. You can get principal balance, but not total balance. And so you need a real-time system that focuses around transparency to help give the finance. If you really want to talk about financial literacy, help people answer basic questions about their account. That's what Canopy does.